Hi, this is Robert Clinkenbeard with the Commercial Landscaper Podcast. We're going to take 20 minutes of your life to deliver some amazing content from accomplished leaders and business owners to provide you with some value to help you scale your business, become a better leader, and push yourself out of your comfort zone into something which is going to stretch you. We really hope you enjoy these shows, and we really encourage you to like and share with your friends and network, which is only going to help us get a wider audience and improve our industry. I'm super excited to announce that in 2023, we're going to be announcing new partnerships, some digital courses, some rebranding, and your opportunity to be coached by one of our many industry leaders, experts, or coaches. Cheers, everyone. Hi, this is Robert Clickybeard with the Commercial Landscaper Podcast. I'm really excited today to be here with Tom Fochtman. Tom, I've known you now for, I would say probably at least 10 years. I think
at
I've
least.
seen you in some of the events. I've seen you with Bruce Wilson at some of the peer groups, industry events. So obviously your name is well celebrated in the market. So Tom, welcome.
Thank you, Robert.
So Tom, tell me, I've got probably, I don't know, maybe 4,000 or 5,000 listeners that listen to the show, and they come from all around the place, Canada, Europe, Australia. Tell my listeners a little bit about your background, just so that they know where you're coming from.
Well, you must be excited. This will probably be your highest rated podcast ever.
I hope so.
I am a landscape architect by degree from Michigan State. Never really practiced as a landscape architect. Went right into contracting. Thought it was odd I would design stuff and have no idea how it would get built. So I wanted to work in construction to figure out how things were built. Fell in love with contracting. Year later, I was working for Bruce Wilson in Denver in maintenance, and figured out the whole reoccurring revenue, the beauty of that, the model, and worked my way up to VP of marketing and sales. Left. Took 3 years out of the industry, just an opportunity. That was all fine, learned a lot, but I came back to it when I moved back to Denver, and I was in California then, working out of at the time, Valley Crest Environmental Industries corporate office. Started CoCal Landscape with Jesus Medrano, had it 20 years. At one point, I think we got to number 41 on the top 100 list.
Cool, well done.
Which back then was 33 million in revenue, 560 employees. And we were a commercial contractor, install and maintenance. I sold it to Chewy 12 years ago, next month, actually. And maybe 13 years, but anyway, took a year off, and through me exiting, I realized the industry needed an exit specialist. And at one point I thought I was going to leave the industry, and I saw the need, but I also decided one of the bad things when people retire is the knowledge that leaves the industry. And the industry had been so good to me, and I had a lot of runway left. I was 54 when I sold. I decided I owe it to the industry to stay in, and where could I be viable? So that was exit strategies, exit consultant. So that's what I do. And Ceibass Venture Partners has been in business 11 years next month. So we basically help people get ready, and we take them to market. We handle the whole process from start through closing. We have legal, we have accounting. My clients don't necessarily have to use those aspects, but we have it. And ideally, we get them the highest price that they could obtain at time of closing, and we help them cement their retirement.
That's awesome.
Yeah.
I know during those 11 years, how many transitions do you think you've been involved with?
I wouldn't say a bunch, but 30.
Okay. That's a good number.
This year would have been the most that I have done, which would have been 4. And we had a deal not close in early November. So we did 3. This year would have been the most I would have done is at 4. And to do 4, that I'm pretty busy having 4 going at once. I could do more, but 4 is a good number, right? 3 to 4.
Yeah, because it'll take what, 3-4 months to, just go through that whole process.
I tell people 6.
Okay.
And we might luck out and get it done before 6.
Right.
I tell them really 6 months to a year, because I wouldn't say it's common, but sometimes the first LOI we execute does not end up being the buyer. And that might take a little time to figure out. And twice it took 3 months before we realized it's not going to happen.
Right.
So that's 3 months of sort of lost time.
Yeah.
Yeah. I think the fastest I've done is 3 months.
Okay, that's good.
Yeah.
And then the size range of those companies, just to give the audience.
Yeah. I'll just give you an example on this year. One was 13 million, one was 3.7, one was 4 million. My largest is 64 million.
Oh, nice.
Yeah. I take smaller ones on. I have one right now that's 9. Looking at one that's 9. So I sort of enjoy the smaller ones because that seller needs more help.
Right.
And takes as much effort on my part, even more, because I don't understand the process.
Right.
Potentially. And it actually pays me less. But
okay.
Again, being involved in the industry as long as I have, I don't like to say no to smaller opportunities.
And you're also giving back to the industry. I know you've been involved in, NALP, you've been on the, different foundations, board of directors, committees, leadership. So you've been really heavily involved in the, landscape industry for many, many years, and appreciate everything you do for the industry. So it's nice, as you say, to be able to give back to people that need your help. You need that experience. I mean, you're so right. Whether they're retiring or they have an exit, there's so much knowledge that person has to offer, and a lot of the time that's not necessarily utilized. So
right.
So I think the fact that you're helping people, I think, is tremendous.
Yeah, thank you. I have to tell you real quick, I represented a client, I think like 3 years ago, and I thought I wouldn't take it on. It was a company in the East, residential, kind of what I call mow, blow, and go. They didn't do any enhancement. They didn't do, I can't remember, maybe they did snow. Anyway, it was 1.5 million, 350 residential accounts. And I met the person. I happened to be in DC with my wife for her business. And I was able to meet this person, and he totally charmed me, won me over. Young guy, had a vision on what he wanted to do. And anyway, we got it sold, but it was really fun. And then he was on a road trip in between, and we summer in northern Michigan, and he came and visited us in northern Michigan at our house.
Oh, that's cool.
So, really fun, right? But like most of them are fun.
Yeah, and you're probably building up a lot of friends doing this whole thing as well.
I do. I will say no to somebody if I feel like we're not a fit personality-wise.
Yeah, that was actually going to be one of my first questions to you, is just how do you have some type of a checklist, or just ideas in your head and what's going to be a good fit for you? Because as you say, you're putting a lot of time and effort into doing that due diligence and helping companies.
So I have a checklist the way it works initially is if we're going to move forward, I do it with travel and everything, call it a 2-day site visit. And we've chatted a lot before I ever land and get to your office, right? And I've sent a list in advance. So I'm gathering information and I'm getting to know the client. Then we're together for like a day and a half. And the idea, and there's a fee associated with that, but it's not, well, it's $10,000. But part of it is I don't want this client or potential client to have a lot of money invested for either one of us to find out we're not a great fit. Like I might get there and, they may not like me. They may not see value in what I'm going to do for them.
Right.
Vice versa. I may feel like this is just not a good fit personality-wise. We need to move on. And I've never moved on. There was one time I should have, and I should have, and I didn't. But that's the idea a little bit of that engagement.
Right.
To get attached at the hip for a day and a half, make sure we're good partners.
Yeah, that makes sense, especially when you see them on their home soil, because you see how they run their business.
Right.
You can't really hide much. If you go in and there's safety issues and just
right, exactly.
employee issues, then it's probably not a good fit. Culture may be a bit lacking a bit, so it's good you do that.
And not only maybe not a fit for me, I might love the owner, but I can tell that the price is not going to be great based on some of the things you just said as good examples, right?
Right.
You can tell a lot when you look at a yard and you walk in an office. When you look at housekeeping, that says a lot about probably the quality of the books, the quality of the safety program, the quality of the assets.
Right.
Yeah.
No, That's great. So, and then what are some of the reasons where deals fall apart? I mean, there's probably so many different examples, but what are some of maybe the top couple of reasons where you see deals fall apart?
I'll give you a great example on the one that did in November. There was nothing extraordinary about this company. They were pretty average, I would say. And average doesn't really excite most buyers. And it was very hard to get information from my client to the buyer. And that sends back bad signals. And they'll be inclined to dig more because they get skeptical, nervous, whatever. And through the process, it took longer than it should have. We call that deal fatigue. And deals are lost due to deal fatigue if they take too long. And the buyer just decided this company is just not good enough to join our team. And, but right away, if the assets in general, like if the equipment, the fleet, old, tired, high mileage, the mowing equipment, the construction equipment, if it's old, beat up, if there's not a strong middle management team, all buyers are worried. Yes, Mr. Seller, you're going to stay on and help run it. Once it closes and the seller looks at his bank account, he decides, oh, gee, maybe I don't want to stay on. But anyway, so they got to have somebody that can run it. So unless you're a strategic and you've got operations all around and you're buying this business as a tuck-in, okay, that's different. But if you're entering a new market with the acquisition, you need the existing people to run it. So you have to have a very strong number two, and under that person, a strong middle management team. Process and procedures gets back to organization. Are your people dialed? Are they turning their timesheets in daily or weekly? Or, do you have CRM? Do you have preventative maintenance programs for your equipment? All these kind of things that Like, I think all landscape contract or all businesses ought to strive to be best in class, and most are not. But if you're at least working towards that, and every year you're investing in people and assets and, software, and your facility's in good shape, it's in a good location, all those kind of things bode well for a successful exit. I had a transaction quite a few years ago now, and it was a strong strategic, and my client filled a nice hole in their footprint, right? Geography wise, it kind of completed their footprint, and it was a private equity backed landscape contractor, and they made their offer. It was not a very big transaction. It was, I think the selling price was 3.7 or 3.5. And whatever, I can't remember, but whatever the offer was, they said, but we're reducing it by $250,000 because that's what we think we have to put into the assets the day we close. Old equipment, it was a commercial landscape contractor, old mowing equipment, tired fleet. So it was just, okay, pretty black and white. My client, when I told him, he was great. I didn't have to tell him this. He knew it. He said, you know what? I accept that because I've already taken that money out of the company. I should have put that money into the assets, and I didn't. I put it in my pocket. So I've already gotten that money. I accept their thinking there. And that was great.
That's fair. That's fair.
Yeah, it's fair.
That brings up a good question. If you go into a company, it's obvious that they're lacking certain things. It might be a layer of middle managers. It might be a replacement operator for if the owner leaves after 3 months. It might be aging fleet. It might be a lack of software. Is there times that you'll say, well, the company is valued roughly at this, but if you did these 3 or 4 things over the next year and a half, you could take it to this level. So you're almost like helping them get that higher valuation. How often does that come into play?
So when I do the site visit, I provide a 5 or 6 page report, and part of that is a value range, which is based on market conditions.
Right.
Excuse me. And of course, it's based on the quality of the assets. I mean, all that comes into play. But I tell them the things I don't like, and the things I don't like probably mean or equate to a discount in the price, a discount in the offer. So I always tell them, I think you can do these things kind of now, right away. And that will lessen the discount. These other things, if you would take 2 to 3 years to do them, will definitely enhance the price. What we don't know is what's the market going to be doing 2 to 3 years from now, because it might have adjusted downward. And even though you did those things, you might sell for the same price 3 years from now that you could have today. So we have to kind of balance that out. We're going through that right now, right? With this rising interest rate environment.
Right.
Maybe a recession here now or soon to come. I think these are funny times. We keep adding jobs. Unemployment's low. We are dealing with those that do office work, the whole work at home phenomena and the vacancies in office. But the landscape industry as operators, everybody I talk to is still doing quite well. They have not really taken any kind of a hit. But after like a 12 or 14 year run and an unprecedented run, at least 10 years of being a seller, and then never been a better time to sell. Right now, with interest rates getting a bump at the next Fed meeting, probably that's what's predicted. Maybe it'll only be 0.5%, but most landscape deals have debt involved, and debt costs more. So the pro forma changes, and it's going to probably impact multiples a little bit, probably. We don't know because we haven't been here in a long time. I mean, when was the last time we looked at 7% interest rates?
Oh, no. And
It almost
higher
seemed,
in some places.
it even seems like not in our lifetime we've been at 3.5 for so long.
Oh, no.
I know.
I
So
think people have been living in the stream world, which they didn't realize they were in. Now they get a taste of reality.
I used to tell people, potential clients, when they're thinking about selling, I would say, well, if I owned your company, actually I wouldn't, because I would have sold it a year ago, right?
Yeah.
Just because we've been in this great market, strike while you can. So now we're in a little bit of territory where we really don't know. My activity is not really slowed, but my gut feel, it just feels like it's going to.
Yeah. And I hear similar things in terms of, the second half of this year might be a pretty tough, not a huge drop, but a little bit of a dip. But it was interesting. I talked to the owner of a company called Multifunding. They do a lot of SBA loans and other loans out there. And, I said, hey, how are you seeing things with, he said interest rates were up at that 8-9%. And he said, I haven't seen any difference. He said, I'm still cranking. I'm still
loaning money.
And he said, yeah, maybe towards the end of 2023, it might dip, but he said, things are still cranking right now.
Well, I use Northern Trust, and I have a line of credit, and I bought a house, a second home in the mountains, closed on it last February, and I used a little bit of line of credit. Mostly I had the funds, but anyway, so here sits this line of credit that was 2.3%. It's 6.6 today. I mean, that's real money.
Oh yeah.
Right.
That's crazy.
Yeah. So I get my monthly statement and I look at it and I go, wow, that's getting kind of expensive.
Yeah, it does get expensive. And I suppose when you talk to buyers, I mean, that now comes into their mindset in terms of, do I look at changing the conditions? Will the cash flow from the business be able to service the debt from the loan I'm taking, or what I want out of the business? So a lot of those things are coming into people's minds, I suppose. Yeah,
for sure. I have noticed that more and more transactions have an earnout. They have a set aside of the purchase price based on the company a year from now achieving at least the EBITDA that it was purchased at, right? And then there's a sliding scale if it doesn't, and there will be a scale in the positive fashion if it exceeds it. And some of these earnouts are longer than a year. And usually, well, not usually, always, we wouldn't agree to something that was not achievable, but the upside can actually be quite good on these earnouts. But at its core, they're there to protect the buyer, a little bit of the unknown, a little bit of the owner not staying around. Are we going to lose some traction? So I am seeing, I would say 75% of our transactions the last 2 years have an earnout provision.
Right, that makes sense.
Yeah.
Well, especially when you look at, in general, the landscape industry, it's had a bump over the last 2 or 3 years with COVID. A lot more people staying at home.
Mm-hmm.
So, obviously with sellers, they want to take advantage of how good their financials look. But as you say, when they look at what's pending ahead of them, it probably makes them a little bit nervous.
Yeah. Yep.
So.
But the good news is landscaping is still, a really solid business model, particularly the service side, call it maintenance. There's always a little fear of unknown with install, and it depends what sector you're in. If you're residential and you kind of work for the normal middle to upper income client, they might wait to redo the backyard or add the pool in high interest rate environment times. They might wait. So it might hurt that company's or that sector's backlog. If you're residential, really high end, probably not. You probably don't lose a beat. Commercially, certainly in times like this, projects are slowed. Projects are stalled out. They're on hold for right now. So there's always that fear with install. And the other thing with install is it's not reoccurring. You have to go resell your backlog, right?
Yeah.
So if you're doing whatever, 5 million in install this year, you got to go find 5 million for next year. And that means you haven't grown. So you really got to find 6 million. So in a down time, that becomes, a little more challenging.
Yeah.
Where
that's usually reflected in the valuation though, correct?
Yeah, all install driven businesses, as long as I've been doing this, don't sell at the multiple that maintenance does.
Right.
The reoccurring revenue side. That is still the sweet spot for today's buyer. They like the safety of that. As you know, residential or commercial, good contractors renew it at 90% or higher, right? So if you're doing that 5 million, 4 point something is going to renew. It's just easier. It's safer.
Right.
And the enhancement work that comes on top of your core maintenance. And it's just a good solid model. It's like all the trades. It's like, plumbing, electrical, when you have a service component and the phone rings and you get to go out and do low risk service work. It's a lot different than doing install work.
Right.
Less risky.
So just to sort of start to wrap things up here, what would be your biggest piece of advice for some owners out there that are they went through 2008 to 10, they've gone through COVID, they're probably mid 50s into their 60s, they're starting to think about some type of an exit plan. What would be your best advice for them?
Hire me.
I love that. I love that.
I would grow my business. You have to grow. You need to grow just for the growth of your employees. If you don't grow, you can't keep them. They're going to move on. So you have to grow. So in landscape, I would have a service component. I would not be install centric. I would have service. If you don't have maintenance, focus on keep doing what you're doing, but build your maintenance. You have to have a management team. It's got to go beyond you as the owner. Keep current on your assets. Your fleet, keep rolling. And you can buy used trucks. Trucks go 200,000 miles now, but just keep your fleet current. It's same with your equipment. Everybody complains about the whole labor thing, but all the good contractors figure it out. So don't whine about labor, just figure it out. It's everybody up, the good companies figure it out. So just figure it out. Recruiting,
whether it be H2B,
whatever it is.
Yeah, recruiting manager, stuff like that.
Younger kids that aren't going to college, 18-year-olds, FFA, wherever you get them. Process and procedure, have your back room organized, always be improving, have job costing. If you don't now, start job costing. Have a lot of these software programs are inexpensive, but have a fleet program so you do stay up on your preventative maintenance, and embrace housekeeping. Run an organized business. It's almost like when you go to sell your home, you stage it, right? The kids' toys aren't everywhere. They're in the closet, and
Right.
you get rid of clutter, and just run an organized business. You go in your employee's office and their desk is a mess. Work with them on that.
Yeah.
Get organized.
Yeah.
That first impression.
Oh, it's huge.
It's huge. It's really important. It just puts a buyer at ease. You mentioned peer groups. We were in the first peer group that Bruce Wilson, it would still exist, Next Level. And we hosted and we cleaned the place up, particularly the shop and the yard. We got criticized for the shop and the yard being messy. and we thought we'd cleaned it up. So that was an epiphany for me. I was like, wow, okay, we got to get serious.
Yeah, that's a tough group as well.
Yeah, right.
High standards.
Yes.
Tom, it's been a pleasure talking to you today. How do people get in touch with you just to maybe explore the option of, working towards an exit? What's the best way for them to contact you?
Well, if you just Google, which is the easiest thing, just Ceibass Venture Partners, it will pop right up. Shoot me an email, give me a phone call, 303-917-1320. I always speak to anybody for at least an hour, of course, at no charge. Happy to help them, happy to talk industry stuff, happy to talk about what I think of their business based on what they're telling me. Certainly happy to talk about current market conditions. I do have a pretty good handle on what's going on, at least in the United States, in the landscape industry. I'm pretty current.
Okay.
Happy to help.
Tom, it's been a pleasure as always talking to you. Thank you
All
for
right,
your time
Robert.
today.
Enjoyed it. Thanks.
Okay, thank you.
See ya.
Bye. Hopefully that was pure, dead brilliant for you today, and you got some great takeaways for your business or your leadership role. This is Robert Clinkenbeard, and we'd love to get you and your friends to join us in our future journey. So please subscribe through the various podcast channels or visit thecommerciallandscaper.com or brucewilsoncompany.com and check out some more information there. Anyway, hopefully you all have a pure, dead, brilliant day. Cheers, everyone.